Hey everybody, what's happening? It's Mark Yagi here, coming to you live. This is actually my first YouTube live, and I just thought I'd check in here and kind of let you know what I've got going on, what I'm thinking, things like that. So hope you're doing fantastic. It's a wonderful day. The market is green, stocks are green. The Fed is kind of quietly backing off. We got a jobs report today coming up, so that could skew everything. By the way, I'm in Thailand right now, so it's a little early. Right now, it's what, 3 o'clock, 4 o'clock in the morning for you, but it's 4 o'clock in the afternoon for me, and things are getting ready to open. So I thought I'd just kind of take a second to go over some of the things that I'm looking at. By the way, this is all education and information. It's not recommendations and stock advice. This is just so you can learn. Now, those of you that have been here for a while, and by the way, thank you for being here. This channel is called the Covered Call channel, right? Covered calls are a way to buy a stock and to create income from selling options to those gamblers out there. Gamblers are the people that buy the options. We are the ones that sell them. So I like to look at it like we're the house, right? So we're the house and the gambler comes in and then they basically over time give us the money, right? That's what happens in the cash flow machine in my program. So everything we talk about really on this channel is related somehow to creating income. Now, I believe income investing is the best way right now to make money in the market. And, it used to be for income investing, what you would do is you go out and buy a bond, right? And like when my dad was investing, he would go out and buy a bond and he'd get 8%. So if you had $1 million in a bond, you were making $80,000 a year. You could kind of live on that, especially back when my dad was doing it. Well, we've kind of shafted our older people in this country and around the world, really, where we went to this zero-based interest rate policies. And so that was paying 1-2%. Well, you can't live on 20 grand anymore on $1 million. Like 1-2% is nothing. Well, frankly, that was a bit of a shaft for those people. And fortunately, for a little while, for them, now if you invest in a fixed income investment, it's got some teeth to it, right? It's still not great. Like it's still 4 or 5%, depending on the instrument that you choose. But if you had been invested in an income instrument like a treasury bond, which everybody says it's the safest thing you can invest in because it's backed by the government. Whoa, great government we got, right? Because the value of the bonds in the last year has gone down 28%. In the last 2 years, it's gone down more than 50%. So that doesn't sound very safe to me, even though all along you were getting a couple of percent a year. And you basically gave up a lot of opportunity to make money in the market because you were told by the experts on Wall Street that you were getting safety. Now, I don't think it is safe. And I think sometimes the safest things that they pitch to you are the most unsafe kinds of investments. So we talk about reliable income because I own some real estate, right? And some of the real estate that I own is a vacant lot. That doesn't pay me any income. Nobody's paying me income. I got to pay taxes and maintain it. Okay, so that's out the window. What else? Well, maybe there's some real estate that can give you income if you got a tenant and the tenant pays and you don't have to evict the tenant. But even that's got some problems. Like I remember, having to clean toilets at 2 o'clock in the morning for tenants when I owned apartment complexes and things like that. So it's not passive income. And there's really no passive income. Even the cash flow machine is an excellent way to invest where you buy a stock, you get a base position, and then you sell to the gambler the option and you create income on it. It's a great way to invest, but it's not without risk and it's not without a little bit of work. So you got to learn how to do it. And if you're going to learn how to do it, you got to learn how to do it right. We teach that. But anyway, that's not what I'm talking about. My goal is to educate you and teach you some stuff about, what maybe you know or don't know, or if you know stuff about what we do, how you can go a little bit deeper. So let's start sharing enough talk. Let me share with you my screen. And I'm just going to kind of go through my usual. This is the way I start every day, every week. I started out with kind of a market glance, and then I drill down into what some of the instruments are that I'm looking at. So I thought today I would just kind of share my routine. And so today, the NASDAQ, you can look at it going into today. It's basically in a consolidation pattern. You can see that right in here. And see if I can make this draw on here. Yeah, I can make it draw. So there's a little consolidation pattern going on in the NASDAQ. It wants to go and it wants to take out this little swing point at some point, right? At 14,446, I think that says. Well, you can see that it's really close to that. It came close a couple of days ago. It doesn't want to give it up. This is all good action, right? It's bouncing around in this little range. When I see something bouncing around in a range, what that tells me, it's like a coiling spring. At some point, it's probably going to bounce, right? And so there's a little bit of energy. Look at this volume down at the bottom over here on the right. There's a bunch of what I call skyscrapers. So if you're looking at the New York skyline or Dubai or whatever, you're going to see these little skyscrapers. Well, that means higher than average volume when the volume is sticking up above that average line. That's telling me there's interest. There's action, right? That's the big money at work. And they're keeping this market kind of bound up, and then they're going to run it higher. Who knows? I may be wrong. I don't know anything. All I can tell you, my crystal ball is usually in the shop. But I try to play probabilities. And so what I see here in the market is I see a bit of pent-up demand maybe happening to try to take out that 14,446 swing point. If it takes that out, the longer this spring is coiled, the more that is going to go higher. Okay. Now, if it goes up there and tests it on low volume, then it's not going to go higher, but it's going to, it'll probably go back down the other way. But if it goes through it on high volume with energy, it's probably going to be running up to make a new swing point. So this has been a long time coming. This has been a building market for a long time. And now we're seeing the NASDAQ kind of coming up the other side. You can see down in here where it tested the 12,543 area at the 200-day moving average. And then it bounced up through the 50-day moving average. That's that red line. And now it's basically above all those little moving averages I have on the screen. And that's telling us that the stock market is interested in taking the market higher. All right. But I don't just make a decision in a vacuum. I have to look at all the indexes. So let's look at 500. That was the technology stocks that we looked at. Let's look at the S&P 500. Kind of looks the same, doesn't it? It made a jump for that 4607. Didn't quite get there. Has got good volume at the bottom if you look at those skyscrapers. And so it wants to go up and take out that 4607 swing point, but it's waiting for the right time, right? It may be today with a good jobs report, who knows? And with a good jobs report, the Fed will come out and say, well, we're not going to raise rates anymore. We might even lower them. We're going to print more money, whatever it is that's going to take this market higher. It's probably going to be something combination of that. And then you're going to see this thing bounce up higher. Now, there is a gap in there that I'm a little concerned about. There's a gap. Now, gaps get filled. And so you've got to watch out for gaps on screens, right? On charts. There's a gap right in that spot. And we want to watch out for that gap because that gap wants to get filled. These gaps also want to get filled. So on the next market correction, these gaps are probably going to get taken out because without having it be taken out, there's a little magnet there that's kind of yanking it back, pulling it back. So who knows? Maybe it wants to go take them out today. Who knows? But the probabilities are telling me we've got a consolidation in here going on. We've got a move for that 4607 level right there. We've got some bullish action in the S&P 500. You kind of getting the point here that now we've got two indexes telling us that we're moving higher. Yeah, they all kind of move together, but they don't really. All right, let's take a look at the down. Although this one, you can see it doesn't move together. There are a couple gaps on the chart, but this thing hit that 3569, and now it's kind of on a breakout. It's got a little teeny weeny consolidation right here for the last week. But this thing, I don't think it has this chart doesn't look at, after years of looking at hundreds of thousands of charts. This one doesn't look to me like it's weak. It looks strong. It looks like it wants to go higher. And so now you're seeing the Dow Jones Industrial Average wanting to go higher. Kind of cool. That's 3 out of 4 that look kind of bullish. And this one's already in a breakout. And then let's look at the New York Stock Exchange Composite, which is a very broad index of thousands of companies on the New York Stock Exchange. And you can see this has had its problems over the last few months, right? You've got this downtrend that finally reversed, and now we're in an uptrend here, and that's really good. And now it's the laggard index. It's making its way back up here. And the problem is oil is a big part of the New York Stock Exchange. It's got all these big oil companies in it, and oil has not been doing awesome. It's been doing okay. But it wants to take out that 16,458. It's still got some work to do because it's got a little consolidation to do. So this is the weakest one. It's 3 out of 4. This one doesn't look as good, but still not bad. All right, you got it. So I always start with the market because the market kind of tells me, should I be long? Should I be short? Should I be going to the pool and playing golf, right? Because that's what the market kind of tells you. If you get the market on your side, and right now the market is green. I have a system called the Genius system, and that system tells us that the market is green. Green means you've got the probabilities of the stock market being your tailwind. You're not sailing into the wind. You're using it as a tailwind. That's what the market can do because 70% of a stock's performance comes from the direction of the market. Because it's a stock market, a market of stocks. And if the market's moving up, 70% of the action from the stock is tied to the market. So if you're in a good stock, you're probably doing pretty well. So in the cash flow machine, we teach people four things: the right stock, the right market, the right spot on the chart, and then we squeeze the juice. That's for that, from that gambler where we collect that income. That's for a later discussion. Let's go through a couple of stocks so you can kind of get a taste of what I'm looking at. So let's start with I'm just going to go through my buy list for my cash flow machine stocks. I have a screener set up that takes into account all of the things that are the main criteria for me. And in my system, we think it's really important to have the right stock, right? That's the biggest question when I go to a cocktail party and people are like, hey, Mark, you're a stockbroker? What are you buying? What do you think of this? What do you think of that? And I'm like, look, none of it matters if you don't believe in it. Let's start with that. But secondly, you got to have the statistics behind you. You got to have the characteristics of super stocks. And so we find those characteristics when we put them in our screener. And that's what we get here. So we're going to be looking here at screen stocks, and people seem to like the way I go through charts. So that's why I'm showing you charts. If you're not interested in charts, you don't have to watch anymore, because I'm just going to be going through about, I don't know, 10 charts or something like that in the next couple of minutes. But you're going to kind of see how I read the tea leaves. And all this is doing, like just looking at the market, all this is doing is stacking probability percentage points on my side. I have no idea whether a stock's going to go up or down. I have no idea whether the market's going down. The only thing I can do is control what I can control. I can control the quality of the stock that I'm in, and I can control my income strategy. Everything else I can't control. But that's more than most people control. Most people put their money into a market and they just hope it's going to go up. And sometimes it does, and sometimes it doesn't. And if they're right, they think they're awesome. And if they're wrong, they think they don't know what they're doing. And that's pretty much what stockbrokers do too. So they put you into these diversified things, and they just kind of hope that the market goes up and takes everything up with it. And the market is going up. Why? Because we print money. That's the reason the market's going up. The S&P 500 is really nothing more. If you look at it over the last 120 years, it's really nothing more than an inflation hedge. It's all it is. It's an inflation hedge. So inflation has basically averaged about 8% for the last 100 years. Sometimes we've had major inflation, sometimes we've had less, but real rates have been pretty much zero, right? So real inflation. So when you take out what's going on with inflation and real returns, if you had the S&P 500, you would basically have preserved your buying power. Same thing with real estate. Same thing with gold. You know, gold can still buy a very nice man's suit, and that's what it could have bought, 80 years ago. So that's the same kind of a thing that you need to know. But that's why you need a good stock, right? Because the good stocks outperform the market. And if you're in those diversified big old mutual funds with 500 other companies, you kind of dilute your performance on the good stocks because you got the lousy stocks in there too. It's kind of a lazy way to invest. But anyway, okay, let's read some charts. So when I look at charts, I like to start with the weeklies. And in fact, I'm just going to stay with the weeklies today. This is CrowdStrike Holdings. They operate a software company, and they do a lot of security in software. Now, you can see that it wants to go to this $300 level, which it gave up, a couple of years ago, right? And we had this big, long downtrend when everything else trended down. And then now we've got this big, long uptrend. You can kind of see, but this is a weekly. It takes out the noise, and you can see where it is right here. It wants to go and take out this swing point. Let's see if I can draw that. I don't know what happened here. Okay, there we go. You see, it's right at that swing point. It's just starting to kind of break through that swing point. Well, that's what it wants to do. It wants to take that swing point out, and it wants to do it on, looks about 24 million, and it's only at 12 million, and we're sitting here at Friday. So it's not going to do it this week. And last week we had 35 million, but it didn't go through that swing point from what I can see. Let's see, the high was gosh, I can't see anymore, guys. Sorry. It's the high was 238. And that swing point, let's look at it, is 242. So see, it didn't get there. The high this week is 244. So it went there and it kind of took out the swing point. But if it doesn't take it out with volume, it's probably going to bounce down to the other side. That's the way I do price volume analysis. So it's probably not going to break it out in volume. It may take a shot at it next week, but it's kind of doing its shot now. Now, do they have earnings coming up? No, they had earnings last week. That was their chance. There's probably no real reason for this stock to blow through that number with any real strength over the next few weeks because it's had its chance with earnings. So I don't know. This has got a 98 relative strength, which means out of 99, it's doing pretty darn well. And there's a lot of buying going into it. And we had huge volume coming in last week, but it didn't take out that swing point. That's a big deal. That's a big deal. So, yeah, I'm not going to say whether it's good, bad, or ugly. You get to decide, but that's the way I analyze that. It's coming out at swing point. Datadog. All right, this is an interesting company. They do software as a service, and you can see this has got a huge cup with handle right here, drawn by the green line, with that big old handle that tested the 50 and the 200. It came up on gigantic volume during numbers, and it's making an attack on that swing high, that top of the handle, which is the breakout point, 118.02. Okay, and you can see on low volume last week, it hit a high of 120.26. Couldn't take out the swing point. What does that mean? That means it probably wants to go down and test something else. It just doesn't have the energy to go through it. Now, if there's some announcement or some good news, it may go through it, but I suspect we're going to get either a downtrend here for a little while, and maybe another consolidation as it takes another run at that swing point. So that's Datadog. All right, let's take a look here at ServiceNow. Is NOW, right? This is, you can see this is on a breakout. This is a little breakout of a flat base. You could see it took out this swing point right here at the top, which was a 614.36. It came over here and it broke out of the 614 level. It went to 636, and it did it on okay volume. It did it only on 12%. But you know what? It's doing it on 12% into a market that's green. And so now things are backing it up and kind of it's pushing higher. It's had 5 weeks in a row up until this week of higher highs and higher lows. So this stock is breaking out. ServiceNow would have been nice to catch it right there where it broke out at 614. But if you missed it, don't be chasing it now. It's probably a little bit late, just for at least this breakout. All right, Palo Alto, something I used to mess around with a couple of years ago. I haven't traded Palo in a while, but this is one of those is this Peter Thiel company or is that something else? No, something else I'm thinking about. Anyway, Palo Alto's a software security, network security. It's on a breakout from a base on base pattern here, and you can see it had a breakout here on good volume, 63% more than normal. And that's what you like to see, right? That's why this thing looks like it wants to go higher. So it's 10% above its breakout point from that little consolidation that it had over the last several weeks, and this bigger one right before it. So it's got some energy behind it. Palo Alto Networks looks pretty good. And you could see they had a little bit of earnings hiccup here in 2023 when they went from 444, and now they're expected to drop earnings from 444 to 277 for some reason. I don't follow the company, so I don't know. That's another thing. If you're going to be in a company, you got to follow it and know what's going on. It's one thing to read the charts. It's another thing to be a solid investor in a company where you know what's going on at the company. So that's why you can't invest in too many darn things, All right, PDD. I think this used to be called Pinduoduo or something. It's a Chinese company that they make e-commerce for mobile phones, something like that. And you can see this had a cup and handle, and it broke from that cup and handle. Look at the volume on that. That volume is 121%. Look at what happens to the energy when you break through on high volume and you head higher, right? Look at this. It went from basically breaking out of the $92 level to all the way $140 level. Wouldn't that have been a nice catch? And you can see, look at this volume. It had earnings per share last week, and this volume was gigantic. I can't get my clip. It's 119% of average volume, right? Double, practically more than double of average volume. So this has got a lot of energy behind it. And I think there's like a buyout or something going on. I think I might have heard a rumor or something, but I'm not sure exactly what's going on. But you can see when you have volume to back up price movements through swing points, you get gigantic movements. That's a $50, $60 movement that you would have been lucky to get. And in fact, if you had watched my video back in November, I said, hey, here are the stocks that I'm looking at. PDD was one of them. I forgot about it. One of my investors told me, he goes, you know what? You were right on that PDD and so many of those other ones you said. I said, yeah, I make my predictions and then I'm pretty much in one or two stocks because I don't follow everything, but that doesn't mean I don't believe in them. All right, so Zscaler, ZS, is a global cloud security. You're starting to see the theme here. So a lot of cloud security stocks that are going up. And when a sector goes up, it drags all the other stocks up or down. If it's going up, it's dragging them up. And so that's what you're seeing. You're seeing this long consolidation here, weeks long. Look at how long this one was, how many weeks this was. Look at that. And then boom, it breaks out, right? You can see that. And then now, last week, it had earnings. It had 199% of its volume. That's amazing. So there's a lot of energy at that spot. And what's it trying to go after? It's going after this swing point right here, right? And that swing point is at 194.21. That's not a really strong swing point because it's kind of made a downward high. But anyway, it's 194.21, and you're seeing the stock at 200. Right? So it wants to go higher. And now that it's hit that and it's hit it on good numbers, the next swing point it wants to take out is around this 250 level. So there's a 50-point run if everything lines up here that this stock wants to go. And you can see it's got a 96 relative strength. Very not bad, right? All right, a couple more here and then I'll let you go if you want. By the way, if you want to comment or whatever, I don't know if anybody's watching, but if you are, great. In any case, let's keep going. So we've got Arista Networks is ANET. This is what I've been talking about for several months, and you can see it just builds little spring, bounce up, little spring, bounce up, little spring, bounce up, double bottom pattern, bounce up, and it had huge volume on this earnings day, 129%, and you can see it just kind of trending higher, not a lot, but it's making all-time highs, and this company, look, it's gone from 287 to 458 to 656. That's some serious earning growth, and that's probably why it's getting propelled a little bit higher. All right. Elf Beauty, they make cosmetics. This has got a beautiful little cup pattern. Love to see a handle develop here, but it's got some work to do before it gets to this swing high, and an all-time high of 139.85, it looks like. And that's the breakout point as far as a cup. So it went down, tested that 200, tested the 50. It's back above it. It came up on some good volume off the bottom. I don't love off the bottom high volume spikes, but anyway, whatever it takes to recover the stock. And now it's had what, 4 or 5 weeks, four weeks in a row of higher price action. And that's good. That means there's some buyers coming in even after earnings, but it still has a lot of work to do to get that 140. And that's Elf Beauty. All right, last one I'll do is Nvidia. You guys have been following the Nvidia story. This is just crazy. This is, look at this stuff, right? This is just nuts, where it went from 34 to 300. And then it had a back off period of time, just like a lot of other things did after COVID. Not during COVID, but after, like 2021. And then look at this beautiful uptrend. Now, this is making the AI uptrend. Now, I suspect on a long-term basis, if you look at the length of this leg, and this is basically from, let's call it 40 let's be conservative and say it's 260. That's 220 points. It made this nice little Fibonacci correction, and now it probably wants to go, if you add 120 to 220, you're going to get 360. This stock blew through 360, right? And that's why now it's having a little bit of trouble, because 360 was the level it wanted to get to. This is a log chart, by the way. That's why these lines look like a different length, but percentage-wise, they're the same. And so now this one wants to go and go and go, but it's got to get through this little consolidation period right here. And I don't think we have that much work to do, frankly. Like, this has come back down. It's tested this $400 low a few weeks ago, and now it's back up here at its highs, and it's selling off on low volume. To me, that's just setting up for it wants to go higher, right? I don't know how much higher it's going to go because, well, first of all, I'm not Nostradamus, but second of all, it's already done its one-to-one extension, right? So that one-to-one extension that I just drew out for you, it's already done that. Now, it may want to go up to a 272 extension, which is another 27% distance off that same leg. But, that's, now we're talking, one-to-ones are higher probability than a 272. So we'll see. Anyway, I hope that was interesting for you. I just wanted to run through and show you what I look at when I go and do these charts. And maybe if you found it helpful and interesting, great. Make a comment. Subscribe to my Covered Call channels. It's called @Covered Calls with Mark Yegi. @Covered Calls is the name of the channel. On YouTube, you can search Mark Yegi, and all the yellow and black thumbnails will take you right there. Hey, listen, hope you have a great day. Good luck with this jobs report today.